Just to clarify and to confirm, this is all off record.
Right.
I explained it to Matt, and he's agreed. And I'm just recording for my own notes. Okay.
Yeah, that's right. Yeah, and as Jane said, it's fine because we're sort of in this for the long term anyway.
Yeah, we appreciate it.
And so we can talk. I hope we can talk candidly.
Awesome.
And that way we can maybe get to be a little more productive here with our time. How are you staffed here in Asia? I mean, I saw the fact sheet, 1,300 headcount worldwide. Is Asia a big part of that, or is it a small?
No, it's a very small part, relatively speaking.
Yeah.
The bulk of our staff is in New York.
Right.
We have a meaningful presence in Houston, Texas, which has grown to now around 70 people. We have a growing and a meaningful presence now in London, which has grown to around 50 people.
Right.
Hong Kong is fairly small, with around 9 or 10 people.
Okay.
And Tokyo is brand new,
right.
And we will have just about 3 or 4 people there.
So it's really, these are like marketing offices primarily?
So we have, look, most of our staff at the company is focused on R&D.
Sure.
We are really an R&D company.
Right.
In that regard, 2/3 of our company is focused on that.
Right.
And we really believe that there is tremendous value in collaboration.
Right.
And therefore co-location.
Right.
To do that. And so we've had a bias towards keeping a lot of people in, in the same building, on the same floor where possible, and so on and so forth, where people can collaborate and so on and so forth. So that's sort of been our bias to keep folks on the ground. The motivation for expanding to international offices was an acknowledgement that many of our activities that require local presence and that would benefit from localization should be done there. So investor relations and being closer to the client was one of them. We have an important part of our research called alpha capture. I don't know if you're familiar with that. I'll tell you about that. And that is a very engaged process of involving with our broker community.
Right.
And it's a very interesting way we do it. I'll tell you more about that, including in China. And that is another reason where we felt that it would make sense for us to have a small number of folks that are in the time zones, closer to the brokerage community, to be more engaged with it. And then, when you do R&D, you want to have a certain amount of critical mass, because having, a splattering of, 1 or 2 developers in random offices, etc., doesn't really promote that.
Sure.
And so, in the case of Houston, that worked well for us because we had a critical mass and there's a cohesive culture. We end up building something that is, that has scale.
Right.
London worked out the same way. London's is 3/4 engineering.
Yeah.
And when you get to that scale where you have 30 or so engineers, you get a very good cohesive state.
Right.
And so we've not done that in Tokyo or Hong Kong or China. We have 0 right now. Mainly China. But the view is if we did, which we hopefully will, we would want to build a meaningful base. We wouldn't want it to just be the odd developer stranded somewhere.
Sure. So tell me about. You mentioned alpha capture. What does that refer to?
Sure. So I can get into alpha capture, and I'll give you sort of the overview of how we think about about the world. So maybe I start with the bigger picture, and then we'll get into alpha capture as just one of the illustrations of the things that we do. So look, the company was started in 2001 by 2 founders who had a very simple but a very profound vision, which is that investment management, like every other industry in the world, was going to get reinvented by technology. And they, you could argue, one of them is a computer scientist, a PhD in AI from MIT. The other one is a silver medalist in the Math Olympiad and is a statistician by training from Stanford. And when you combine an AI guy and a statistician, well, today we call that data science. That wasn't the buzzword back then, but that was effectively the idea, is that the world of investment management is filled with data. And interesting things were happening right around 2001. We saw decimalization take place in the U.S. equity market. We saw electronification. the computing power had reached a scale where it was generating digitalization, it was exploding, the amount of data in the world was exploding, and so on and so forth. So in fact, it would become humanly impossible for humans to continue to make discretionary decisions. I mean, I used to be a sell-side analyst a long time ago, and in my days, or frankly, if you go back 50 years before my days, life used to be simple. You used to have a smaller number of companies. The companies were mostly focused in one country or in one industry. Right. They were highly vertically integrated, and so you could become an expert in a particular sector, a particular company, and you could say, look, I understand this company inside and out. I can understand the inputs, I can understand the outputs. It's sort of fairly easy to understand. And if you think that the investment business has always been about getting an information edge to derive insights and make decisions from, well, I mean, that's always been the case, and people have always used technology to do that. Yep. Whether it was a calculator, or then it became an Excel spreadsheet, yep, or today it's supercomputing, it's always been about that. Yep. The scale of the problem was just very different. So in my days, if I were an analyst, I could go visit management, have a conversation, come back, build a model, make a prediction, think about it, etc. And then I would have weeks to effectively transmit my information to my clients. Clients would have time to think about it, maybe build a portfolio, build a position. Anyway, life was good. In today's world, where you look at a company like Apple, which has global, has hundreds or thousands of suppliers, they're interconnected, there are hundreds or thousands of people who follow Apple, who have just as much insight as the analyst at a bulge bracket firm. The world is much more complicated, and so you can't just say, hey, I'm just a small cap pharma analyst and this is what I specialize in, because you could get disrupted by a biotech company in Israel, and so on and so forth. So the approach to the world fundamentally is that you have to take a scientific mindset, and you have to try to build what we call a 360-degree perspective to understand all the dynamics, all the drivers of what might be predictive for a company. And so you take a very different mindset and a very different approach in even how you organize the company, the way you build the culture. And so that hence, when the company started with 15 people, Sam was one of them, by the way. Sam was employee number 3 in the company. 2/3 of the folks were engineers and scientists and R&D.
Yeah, I've read that that ratio is
constant. And so even today at 1,400 people, 2/3 of our staff is focused on R&D, and that culture has stayed. We have really tried to preserve that culture of a scientific mindset. So the 360-degree approach is about applying modern technology, data science, and AI techniques to harnessing as much of the data as possible to make predictions. And so we're not dogmatic about, hey, we are value investors, or we only believe in fundamentals, or we only believe in this kind of data or that kind of thing, et cetera, et cetera. We say, look, frankly, all of those techniques are valid. As long as someone in the world is using those techniques to make predictions, well, we should care about that too.
Right.
And so we, for explanation purposes, we sort of group our forecasting techniques, forecasting models into 4 different buckets. We have fundamental models, we have technical models, we have event-related models, and then we have this thing we call alpha capture. And so alpha capture is just one of the 4 families of groupings of models that we have. And it's arguably the youngest, but when I say youngest, it's now 11 years old, family. The insight was, look, there is information that gets transmitted from the sell side to the buy side. Right. Typically on the phone, or through voicemail, or through emails, and so on. You have all these salespeople who are giving ideas to portfolio managers and analysts, to asset managers. Like, what are they all talking about? What is that? And we didn't really have a way to listen to that. We didn't know if there was any value in that or not. But the intuition was there must be. After all, the buy side pays a lot of money for this research and for this sales coverage.
So the underlying concept is to capture momentum investing?
It's not momentum investing. It's sort of capture the sentiment and the advice that is being shared from the sell side community to the buy side.
Right, not necessarily momentum, but it could be. But all right,
it could be.
Yeah.
And so the way for us is because we don't have traditional PMs and traditional analysts who are listening to voicemails and picking up, talking to these folks. And it's like, well, let's do it, a technological way, and we built a proprietary system that we deployed now on, over 2,000 contributors globally. Across over 100 brokerage desks, including China, and the salesperson on the sell side will input very efficiently trade ideas to us that we can absorb electronically. We can compliance check on their end and on our end, and so on and so forth. And that allows us to get some insight. And to us, it's just one more data set that complements all the other sources of information that we have to try to build, an ever more complete picture of the drivers.
So is it, just out of curiosity, so they're inputting data, it's proprietary for your modeling, and so the relationship with the brokerage is what?
Well, we there are a number of things. We compensate them.
Okay. So it's a fee that you pay, or
it is, but I have to tell you that it's actually more than that. They derive, more value than just getting a fee. They get feedback back. In the same way that when I used to be a sell-side analyst, I would call, my most important clients, my biggest clients, the one who paid me the most, but I would also call my smartest clients, because I would learn something back. My smartest clients might tell me, it's like, oh, Noble, you're late. I've heard this 3 times already. Or, by the way, your bull case makes sense, but you haven't considered the bearish case yet. Or, I just got a call from somebody else who was telling me this. And by the end of the call, I would be much smarter and I'd be like, oh, wow, this is really interesting. And next time I would call that person first.
Sure.
And so we thought about it, and we were just like, well, we have all this data that we're gathering from, these people. Would we be able to play back some aggregated level data back to?
So you provide the aggregate data back to the brokerages so that they are aware of what's happening around them as well.
Right. So and that creates a very synergistic sort of loop to create more engagement.
Any concern about creating an echo chamber from all that as well?
No, I think we're very careful with what we provide, and that's right. But it's a valid question.
Yeah. No, it's.
Yep.
Anyway,
but that's just one. It's an easy one to discuss.
Right.
But we literally have hundreds of models.
No, I understand. I've been reading about the company. It's fascinating. I want to talk about data in a minute, but I do want to ask about just sort of some corporate questions if I can. So you're U.S. New York focused and expanding now into the London market, as you mentioned. Your presence, a beachhead here in Asia. What is your outlook on developing this particular region or developing your presence here?
Well, we've taken so again, about the company, let's start. We've taken a platform approach to organizing the company, and that's a very important, principle on how the company is organized. We feel that lends itself to a better culture, that lends itself to better collaboration, to a more scientific mindset. That's essential, and we've avoided the balkanization that you would find typically at hedge funds or asset managers. So we're not organized with, this competing team with that competing team, or organized by asset classes, or organized by geographies, or it's really the technology and research platform is a united platform that supports all of our activities. And the benefit of that is what we built in U.S. equities was very easy for us to leverage and expand into European markets or into futures markets when the time came for that, very early on. And so from, not quite day one, but virtually very early in the company, maybe even 2002, the company was able to trade beyond U.S. equities into international equities, and has been expanding ever since into futures and FX and options and derivatives.
So you're already present here in the markets.
We've been trading China for years.
2005?
Yeah. So again, as each market opens up, back in the days we only could trade ADRs and H shares. That was what we could do. When A shares become more accessible, and we applaud the progress that's happening with Stock Connect and so on. We've been participating more and more.
So you participate through the Connect via, I guess, what, Hong Kong Stock. And then do you? Oh, that's interesting. So I'm curious, in your investable universe, what do you include and what do you disinclude now for let's say this market?
We are driven, so we like to track,
Right.
every company if we could. Obviously, that's not feasible,
Right.
but we try to be very broad-minded about what we research and what we collect data on.
Right.
The trading universe is determined I would say the primary driver of that is liquidity. And that's true for, generally speaking, that is a very important consideration for us when we enter a market, when we consider which securities we would be looking to trade. It's obviously data availability, transparency, regulation. Basically, we're looking for a level playing field in a market, and we're looking for liquidity.
So the general benchmarker in China has always been, I don't know how many companies now?
300. Maybe the Shanghai is 300.
300 is that your investable universe?
No, that's the index.
Right.
It's like S&P 500 equivalent.
Right.
Investable universe probably like 3,000, 4,000.
Right. That's the investable universe, but for your company.
Yeah. So I think that through StockNet, that's what I heard from Bonnie, our HR, Hong Kong representative.
Right.
That one has about the StockNet covers about 1,000 instruments. That covers 85% of the volume.
Right.
That's a lot.
Yeah.
So it seems like that's good enough for us.
Really? So you would look at all 1,000 instruments as being investable then? Yeah. Okay. It's interesting.
So in U.S., as example, in the U.S., U.S. has about 8,000 stocks.
Right.
And we trade about 3,000, the biggest 3,000 stocks by liquidity. And we don't trade the other 5,000. So the reason behind that was, some hedge funds actually focus on the less liquid ones. Right? So that's just different style. But for us, we as a company, we trade quite a bit.
Right.
So liquidity is really important.
Right.
And also, when you trade these super liquid stocks or more liquid stocks, you actually have lower risk also. Like just imagine a no-name company, and if there's some big issue with the company, who's going to buy it? It just drop like a stone. But with the big liquid ones, there's a lot of investors, so it's much easier to get out if the company getting into trouble.
Risk management is really built in at every level of our investment process. And the surest form one of the key points of risk management is actually liquidity. If you have a diversified portfolio, that helps. If you have a broad enough portfolio, that helps. If each position only represents a tiny fraction of your portfolio, because you have 3,000 securities in your portfolio, that helps. If everything that you hold is liquid, then that helps. So it's sort of built in every. It's a key principle for us.
I think that's probably this is my guess. Again, it's off record. So our founders used to work for D.E. Shaw. And D.E. Shaw, just like long-term capital, got into trouble in Russian bonds. And how liquid is Russian bonds?
So liquidity is an important sort of
and also to reduce your risk in the crisis situation.
I have to ask as well. A lot of folks are out here, raising capital from institutional investors here. I read somewhere, I want to say 50% of your AUM is from institutional. Is that about right?
Oh, it's even higher than that.
It is?
It's also always difficult to see how do you define institutional or not.
Okay.
It is, direct or indirect, depending on how you consider it. It's actually the vast majority of our capital is institutional.
70-80%?
In some cases it's intermediated through advisors and so on, but it is ultimately representing. And that again, look, we have been very disciplined about the capacity. We, are big investors ourselves. In some years, we've had to do the uncomfortable thing of returning capital to investors because we wanted to stay disciplined about how much money we can manage. And we have focused on prioritizing, a diversified investor base and an institutional one because they are, more sophisticated, more long-term. It's also for our employees more virtuous to be able to manage money for real people.
Pension fund.
Right.
Are Chinese? Are you also managing for Chinese institutions?
We do. We have a small number of institutional investors.
And I imagine that's an important. Not necessarily that you're looking, because I understand a lot. There's a lot has been written about how some of your funds have been closed. But
actually, at this point, all of our funds are at capacity.
You have no capacity.
No.
Today, Matt.
You cannot get in. Sorry. Too bad for you.
I mean, we're hard at work. We're hard at work to, on R&D, and in the years we have been able to increase capacity. But look, our first priority.
Capacity at the moment is about 55 billion.
Yeah. 53. Yeah.
53.
Yeah.
And so what did you do? You grow?
Well, I mean, look, so our first obligation is to make sure that we serve existing investors.
Yeah, of course.
And so, fortunately and hopefully, if we keep making money, we'll have more assets.
Yeah.
And we'll have to support those assets.
Right.
And so that's hard enough to keep up with. But we have, 800-900 people who are working hard to, expand in new markets, to collect new data sets, work in new techniques, et cetera, et cetera. And over the years, we've been able to keep up with existing organic growth.
Right.
And every now and then develop new products or find additional capacity. So we hope that'll continue. China, frankly, we come to that, I mean, it represents obviously an enormous opportunity from that perspective, because it is, by some measures, the second most liquid market in the world. It represents, I mean, even though we've been trading, it represents a very small portion relative to its potential. We haven't really tapped fully into the data, nor the talent, nor the liquidity of the markets that it affords. And with the changes and the reforms that are taking place, this is fantastic. Both from the perspective of our global investors to tap into an enormous market, but from the perspective of a local market, where our approach could, develop local asset management capabilities.
Absolutely. No, I mean, being in the land of kingdoms, is a little surprising to hear a company operating at capacity not talking about how it's going to double its capacity in the next 5 years.
No, I mean, look, that is, we have been focused, so this is, again, we have been focused,
philosophy.
We've been focused on alpha, not assets.
Yeah. Right.
And that is, again, a scientific mindset.
Sure.
Assets for the sake of assets is not a good strategy.
Right.
That means that we have to be realistic. There's only limited amount of alpha in the world.
Right.
Yeah. So, but also just from a different angle, suppose Vanguard or Fidelity, they just take on the market risk. Right. They just offer effectively an index fund.
Right.
Then it's almost unlimited capacity. They just whatever money you give me, I'll just buy the market. That's it. I'm done.
Yeah.
But for us, we actually really develop alpha. Yeah, so that's limited, and we actually have capabilities to understand how much alpha we can give, we can produce.
Right.
We want to guarantee, not so much guarantee, want to ensure a good return for our existing investors.
Right.
Yeah, so that's a difference in philosophy.
So as you know, Fidelity came in last year and they got a China license. Man Group is here now. There are a few other. Witten is applying. Any interest in getting a license here and opening a storefront here?
Very much so. We've been meeting with regulators. We've been speaking with potential candidates.
Right.
We've been following this very closely.
Yeah.
This is my third trip to China in the last 4 months.
Wow.
So this is a big initiative. Sam is making this a priority for himself. This is a big priority for the company. We are very encouraged by everything we're hearing from the regulators and the actions that they are taking to, really be committed to this reform.
Right.
It's impressive, and we think that this is going to be a very welcoming, environment. We're very excited about that.
Yeah. So would you expect to apply for a license at some point?
We are, we're very interested. We're very engaged with that process.
Okay. Now we're sounding like we're on record. Have you applied already?
We want to be careful with what we say. Yeah. But
okay. All right. But it sounds like you're in the process of getting a license.
Yes.
Maybe this year, hopefully.
It's hard.
April.
It's hard to tell.
Yeah.
I mean, it seems like the regulators
I'll
are
let my
committed.
markets guys know. Obviously, when you get one, you want to tell somebody about it, right?
We will.
Yeah. I'll let my markets guys know. It's. I mean, it's interesting what's happened.
We want to make sure we don't jump the gun.
I mean,
especially when it's a regulatory approval.
Right. Sure. Yeah, we're not writing as we said. So, but when you think about these things, you must look at 2015 and what happened out here is just a horror story, right? It was, as a person who I had just returned, I had been back in the States for about 6 years, and then came back, and immediately when I arrived in Beijing in 2014, late 2013, 2014, I was getting these phone calls. Do you want to borrow money to invest in stock? Right? Would you like a margin loan? These cold calls on my cell phone. Something's wrong, right? The market was going up, and it was going up, and it was, obviously unsustainable. And a lot of the hedge funds, a lot of the, understood, the opportunity in shorting, in having short strategies on the market, and for that they were not appreciated by the regulators here, and there was a lot of awful blowback after the stock market correction. Do you have any concern about sort of the way the government participates in the market?
Look, I think that certainly that was a disconcerting period for investors, people who were watching. I think it was a learning experience for everyone involved. Sure. But ever the optimist, I think we look at that and it's like this progression is not going to be linear. There will be times where people take one step back, 2 steps forward, and so on and so forth. We should expect that. Yeah. I think that the retail investors here, or investors in general, are going to have some setbacks during market corrections, understand what volatility is. We understand that a lot of people, that the culture here is still very much of a speculative mind on one hand, or guaranteed returns on the other hand. Well, that's not the nature of the equity market in the long run. So I think there will be some education and some. But when we speak with regulators, we sort of applaud their attempt at sort of learning from other markets' mistakes to try to design things in a more efficient way to start with. They've been very curious. They've been very interested in learning how other countries have sort of learned from their mistakes to try to design policies and systems. So I think there's an opportunity for investors, for regulators, for asset managers to leapfrog.
Okay. All right. I see where you're. Okay. All right. I guess what I mean, how do you see? I guess.
And we take a long-term view, if that's your question.
Yeah, and I'm just thinking about balance because, of course, either you're participating in the market or you're not, but at the same time, the risk here, the risk as a participant in the market is different, I think, maybe qualitatively than it is in other markets.
Mm-hmm. That's for sure. Yeah, that's for sure. So I think it takes a long-term perspective.
Right.
Because who knows, it'd be difficult to predict what things will look like, in 1 or 2 years. But I think you could look at the fundamentals and you can say, all right, in 10 years, it sounds like the commitment is real and the fundamentals are strong, and this is going to be an enormous, investing.
Right. And again, you look at the market here, and I've been covering markets that closely for a number of years, but still, basically, still retail driven, still momentum driven, in many ways irrational, in the tradition, sort of looking at fundamental investment sort of theories. Government driven, which must present tremendous opportunities for a data company like yours, in that you can sort of pull back all of the sort of the factors and probably model it in a way that isn't being done successfully by as successfully by other companies, which I imagine also creates risk.
Well, it's certainly very. No, you're right. I mean, there are risks of the type that you mentioned. So that certainly is something to consider. It creates an opportunity for the reasons that you mentioned, because the market is, let's call it, less efficient. Right. But on the other hand, back to my leapfrog argument, we shouldn't assume that it's going to stay this way for that long.
Fair enough.
Because unlike the markets in the U.S., for instance, which took a century to develop. Right. that movie is going to play out much, much faster.
Right.
Over here, where people might just leapfrog and saying, all right, look, forget the discretionary approaches. I'm going to go straight to quantitative approaches.
Yeah.
And,
Are there successful quants here?
I don't know the market well enough to know the local players here.
Could be.
I would imagine. I mean, there is a tremendous amount of talent.
No, I know that. I just wondered. I was wondering whether you looked at anyone locally when thought that they were doing a pretty good job of.
We haven't. I don't have any.
Because some people claim to be. You don't know. I mean, I'm not covering markets, but I've spoken with enough characters who claim they're using quantitative strategies, and
Well, so let's talk about that. I mean, the whole word quant is a bit of a misnomer.
Right.
It's like, what is quantitative? I mean, look, quant means using numbers to make it. I mean, look, isn't finance about numbers anyway? So to some level, everybody's a quant.
Right.
It all depends, what that really.
Well, you're
means.
highly data driven. Your company's highly data driven.
We are. So
the question, bleeding between whether you're a data company or a financial services.
And I think that's the key. The DNA of the company is that of being a scientific company, a technology company. We describe ourselves as a technology company. Our offices are in Soho, rather than Midtown or in the financial district, and so that I think is very important.
I think
and very difficult to replicate.
I think probably the main difference between ours is more like a systematic approach versus discretionary. So whether it's futures or equities, you can have hedge funds just employ a few analysts, like say 20 analysts, just really analyze the industry or the company, right, and then give recommendations and then potentially trade on that, right. But Two Sigma is much more data-driven, much more like computer technology-driven, right? So it's much more using a lot of simulations, using data science, using statistical methods, machine learning, all these modern tools to do their investing process, rather than just use human to analyze individual stuff. It's more like a process.
Right.
So that's a main difference.
Getting to the sort of the data question here in China, again, the rules are a little different. The government is very interested, especially new regulators are very interested in harvesting data. I know onshore and offshore, in fact. Is this an issue in any way for you guys? Since you are, your data is your proprietary information.
Well, data, we have some sets of data which are proprietary information. We use lots of third-party data as well. Yeah. And we are interested in that. And there are some difference in policies and procedures. And, we're always compliant with the regulations, certainly regarding MNPI and PII, but regulations vary from country to country, and we're very careful about that. And we understand that in China there are certain regulations that keep data onshore, and so we'll have to adapt to those.
But you don't see any issues surrounding that.
No, I don't think so. I think that
actually, if we engage with China in a deeper level, it's actually better for our firm, right? So imagine we have a local office here to engage with data vendors, and then they can do local research and analyze the data much more closely than what we can do in New York, because I'm just thinking that the local data person can obviously more versed in Chinese rather than a New York person, and then they can potentially derive more insights out of that.
Yeah, I mean, I think the localization benefits are tremendous here. We have to be humble. We have to acknowledge that this market is not just large, but is sufficiently different.
And who knows? Also, the other one is that the American always have much more strict rules in privacy of the data. Maybe not so much in China. Right. So maybe there's more accessible of data sets we can get.
Interesting. The flip side of this is, I know that China is now requiring that for institutional investors going overseas, Chinese institutional investors are going overseas, investing overseas in funds overseas, that the funds themselves need to register
with the QDLP.
Register. No, if you're running any kind of fund offshore, if you're, let's say, accepting China Life as a client, that the fund itself must register here in China.
I'm not familiar with that regulation.
Okay.
That might be. I don't know.
So that's what Noble is saying, QDLP.
Okay.
It's the qualified domestic investors.
Oh yeah, QDLP.
They give you a quota.
Yes. That's right. Yes. I'm sorry. I was thinking you were.
Yeah.
Yes.
So the fund
exactly.
is overseas,
Right.
is as it is.
Right.
But they limit. So Chinese government limit how much money can go out.
Right, but the funds themselves, the offshore funds, need to register here.
They do under the QDLP program.
Yeah. Okay. Yeah. Right. And that's not either an issue for you either.
It's not an issue for us.
Yeah.
We haven't registered in the previous batch. I believe that the quota is complete.
Right.
I don't know if they're accepting new ones, but we haven't registered in the past. We might consider that in the future if the government reopens that.
Interesting. Okay. All right. I got to ask something from my friends in Shanghai. Are you guys participating in the oil futures market?
I can't disclose what instruments we're trading.
But in general, our philosophy is the more market we can access to, the better.
Okay. Okay. All right.
Especially the liquid ones.
Right. It's because the market, has been, it just launched. It's been very.
But typically, we have. So in terms of investment side, we're also very conservative.
Right.
So we typically take some time to analyze the situation before we jump in.
All right, fair enough. Is the I also want to just my own. There's been so much volatility. I guess your colleagues and you yourself have spoken about this. Start of the year has been sort of difficult for a lot of funds because of the volatility. Have you guys figured out a strategy for trading on the volatility or trading on, let's say, the trade war that is emerging between the U.S. and China? Can you guys, do you have a way of trading on that?
It's not so specific. I think we try to, as I said earlier, build a 360-degree approach. We try to develop models that are going to perform through the market cycles.
Right.
We don't try to develop models that are narrowly focused on one particular, scenario or event. It's actually the comprehensive nature of the model that have helped us navigate and produce consistent performance.
Right.
Look, volatility is a function of an adjustment in market environments.
Sure.
And we're going through one of those periods of adjustment. And so I think it's difficult for a quantitative approach or a human to precisely call an inflection point like this.
Right.
And so the better approach is actually to develop a diversified suite of models that allow you to navigate through market cycles.
Right.
And that's sort of really what we've tried to do, and I think we've been successful at over the last 15 years.
Yeah, fair enough. It's been tremendous. I know you guys are real busy, and I appreciate you spending your time with me this morning.
As you said, this is a long-term relationship, so we appreciate this is a big commitment for us, and we wanted to establish a relationship.
No, absolutely.
Tell you our story.
It's great. Yeah, no, I will share just some of the sort of color with my colleagues in Shanghai who are primarily covering markets, and keep us updated on your progress.
Definitely.
Is
And
that with Samuel? Samuel Shan?
Yes, that's right. So Sam he covers the funds most closely. He's our chief markets correspondent in Shanghai, and tremendous resource as well. He's been doing this for as long as I have practically. He's very good.
I'm sorry?
Yeah, as long as I have. He's my colleague in Shanghai. He's very
very good.
He's Shanghai red.
Yeah.
Of course, he's
both Shanghai and also same tenure as you. So must be good.
Yeah, very good. So keep us updated. I'm just wondering, just out of curiosity, are you guys, because of all the tensions going on right now between the U.S. and China, are you hearing about that in your this week at all?
No, surprisingly, no, we haven't.
Nobody wants to talk about it.
Nobody has brought it up. No.
But my guess is. So President Xi, right, obviously, want to present and the message, which is China needs to open up, and the financial sector is really important to us. No matter what the trade war is going on,
Right.
this is like we're committed on globalization, no matter what Trump is doing. Right. So that's has been his message.
Right.
Yeah.
No, I appreciate it, but there's sort of passions on both sides of the ocean, and I always imagine that in moments like these, maybe not here now, not now, but at some point, if things continue to deteriorate the way they are, we're going to see some of that. Just because it's usually,
We hope not. We hope this is just.
Yeah.
We just hope this
we
is,
all
this
hope
is
not. Yeah.
rhetoric and short-term volatility.
Right.
In that sense, and that really the fundamental path that everyone's on is a healthy and positive one.
Right. Of course. No, we all do.